Hi, my name is Bruce Frost and I live in Sydney. I'm a director of FCC Audit Proprietary Limited. We are specialist auditors of self-managed superannuation funds. I'd like to introduce to you a report we produce at FCC Audit as part of every audit we undertake. It's called an investment return report. Investment return reports give trustees and advisors of SMSFs a valuable tool for investment decision making. It enables trustees and their advisors to answer a very important question. How well are my SMSF investments performing? In order to adequately provide for their retirement, every member would hope that their superannuation investments are performing adequately to support their retirement income needs. An important guide to how SMS investments are performing should be found in the annual financial statements. However, many trustees and members are confused by their SMSF financial statements. That's because these reports are prepared to fulfil statutory obligations and are not very helpful in assessing the investment performance of the investments in the superannuation fund. The reasons SMSF financial statements can be confusing include contributions from members are usually included as fund income, but they are not income from investments. They are additional capital for investment in the fund. They are not a return on investment, therefore not really income. Also, on the expenditure side, expenses often include pensions and insurance, which are not investment expenses. Pensions are a return of capital and life insurance is a member benefit. So it's little wonder that the financial statements do not report the financial performance of an SMSF's investments. Another reason the financial statements are not totally helpful is that there is no appropriate investment performance benchmark reported in the reports, only a comparison to prior year's actual returns. Comparing only to the prior period does not account for changes in funds invested, nor changes in market conditions. However, our investment return report helps trustees because it's a simple report which is included in our auditor's letter to trustees. It's a standard part of our audit, so there's no extra cost in providing the report. But it's easy to understand because by showing only 1% return, which is compared to market-based benchmark returns, trustees are able to see quickly whether their investments are performing above, below, or in line with general market conditions for the asset classes their investments are placed in. There are 6 steps in our audit process. We use the indicative investment return of the fund when compared to industry benchmarks to determine the likelihood of errors in the published financial statements of each fund. Where there is a significant difference between the actual performance and benchmarks, the reasons are investigated and assurance gained that the financial reports are accurate. To give a brief background to working out the indicative investment return or actual investment return of the fund, the indicative investment return is a calculation of the actual performance return of a fund's investments for the year. But why is it only indicative? Because it is not a precise calculation, particularly because the fund balance varies on a daily basis. The indicative actual investment return is then compared to the composite benchmark return. The industry benchmarks used are accepted industry benchmarks. For example, shares, the ASX 200 accumulation index is used. This index accounts for the general movement in the price of shares and also for dividends received. Each fund's actual asset allocation is weighted against the benchmark for each class of investments to determine a composite benchmark return. Then we quantify the variation from benchmark in dollar terms, not just in percentage terms. The calculation of the composite industry benchmark looks something like this. The assets of the fund are allocated to popular asset classes with allowance for borrowings, and also unusual asset classes can be assessed if they are material. The industry benchmark for each asset category is then weighted for its proportion of a composite benchmark return calculation. The indexes for each asset class are then added together to get a composite benchmark return percentage. Incidentally, we also compare the fund's investment expenses against industry benchmarks. This gives us a guide as to whether advisors' fees are in line with current industry experiences. The final report is concise and easy to follow. It is provided with comments by our audit team on any significant variations between actual and benchmark performances. We believe the investment return report provides a valuable decision-making tool for trustees and their advisors. Thank you for listening to this presentation, and we look forward to discussing the benefits of investment return reports with you further. Call or email Grace, Stuart or myself on our contact details on the next slide. Thank you for listening.